Welcome to All Stocks Index, your go-to destination for insightful analysis on companies' performance through a visual and detailed examination of their financial statements. In this video, get a quick overview of Apple's 2024 Q2 income statement. You typically find a standard 10Q report in an Excel or a PDF file. Instead, we will express the numbers in a Sankey diagram. It will serve as our roadmap for navigating through the financial pathways of the company's operations. We will examine the figures that drive the financial results of Q2 by exploring sources of revenue, cost and expenses, and profit ratios. First stop, Apple's revenue streams. Apple's primary sources of revenue include iPhone, Mac, iPad, wearables, and home devices, as well as other services. Since 2008, iPhone has been Apple's most valuable product, generating 51% of total revenue in the last quarter. Here's how these categories performed in the last 5 quarters. Since Apple is a cyclical stock, it generated higher revenues in Q1 than in Q2. We will compare the second quarters of 2023 and 2024. Revenue in the quarter ending March 30, 2024, was $90.8 billion, a 4.3% decrease year over year. iPhone sales were down 10%, same with iPad and wearables, which dropped by 17% and 10% respectively. Nevertheless, Apple made up for it with their solid growth in the services category. Over the years, this category has been growing steadily. Something to keep an eye on for the future. Tracing the revenue back to 2021, Apple had a great performance, especially in Q1 of 2021, when its revenue reached $124 billion in a single quarter. Even since the pandemic years, Apple still managed to maintain high sales. Overall, it is an upward trajectory with an average quarterly revenue growth of 4%. In fact, Apple generated more annual revenue than Google, Microsoft, Meta, Tesla, and Nvidia. Only Amazon achieved far higher sales than Apple. Returning to our roadmap, let's zoom into the costs of production. As stated earlier, the company offers both products and services. Total revenue in Q2 was $90.8 billion. Products constituted 74% of total sales, a total of $66.9 billion, while services accounted for the remaining 26%, a total of $23.9 billion. The cost of sales is the accumulated total of all costs used to create a product or service. Apple spends 63% of product sales in costs such as buying materials and components, direct manufacturing labor, packaging, shipping, and freight. On the other hand, producing services is far more profitable for Apple. Only 25% of service revenue goes towards costs, leaving a higher gross profit. To calculate gross profits, we take the revenue and subtract the cost of production. Gross profit from products was around $24.5 billion. Gross profit from services was around $17.8 billion. That's almost double the gross margin of hardware sales. We'll combine the gross profits together to calculate the total quarterly gross profit, which comes out to be $42.3 billion. Gross margin is an important profitability measure that looks at a company's gross profit compared to its revenue. Dividing $42.3 billion by $90.8 billion, we get around 46.6% in gross margin. A very strong ratio for any company. Looking at historical data, Apple's gross margins grew every quarter in the last 5 quarters. In Q2 of 2024, it had the highest margin, suggesting that Apple is retaining more from each dollar of sale by keeping the costs low. However, we are not done with expenses. We still have operating expenses, taxes, and others. Returning our focus to the gross profit of $42.3 billion. Let's look at how much Apple spent on its day-to-day operations, known as OPEX, or operating expenses. Apple spends around $14.4 billion on OPEX, a significant chunk of their profit, leaving $27.9 billion as operating profit. Overall, Apple efficiently managed its operating expenses over the last 5 quarters. The company found the right balance between reducing the day-to-day costs while growing its revenue and increasing earnings. Apple's OPEX remained consistent between 12 to 16% of revenue, depending on the quarter. There are two common categories of operating expenses: research and development, and selling, general and administrative expense. Apple spent about $6.5 billion on selling, general, and administrative expenses. But it spent even more on research and development, almost $7.9 billion. That's an estimated 8.7% of their revenue. Apple depends heavily on R&D for new and improved products and services. Moreover, R&D is critical because failure to offer cutting-edge technology can lead to loss of market share and even potential bankruptcy. Another expense that gets less attention is other income or loss, which can originate from interest, dividends, miscellaneous sales, rents, royalties, and gains from the sale of capital assets. Although there are no specifics on how this income was incurred, we are told Apple generated $158 million in other income. This brings the remainder to $28.1 billion in income before tax. Apple paid $4.4 billion in taxes with an effective tax rate of 15.8%. We finally arrive at the remaining net income of $23.6 billion. Let's do a quick recap. Net income, also called net earnings, is total revenue minus cost of goods and services, minus operating and other expenses, and minus taxes. It's the bottom line on the company's income statement. $23.6 billion is what Apple generates from operation in just a single quarter. Net income is the best indicator of a company's profitability because it shows the total amount its shareholders earned during a given period. We can take it a step further and calculate the profit margin. It is a financial performance ratio calculated by dividing a company's net income by its net sales. In this case, we take $23.6 billion and divide it by $90.8 billion, arriving at a solid 26% profit margin. For every dollar of revenue Apple retained over a quarter. Looking back at the last 5 quarters, we notice that profit margins grew in the last quarter, while revenue decreased, offset by the growth of sales in the service category, which pushed the margins higher. Profit margins depend on what the company does. Hence, it's difficult to compare this ratio across companies from different industries. Also, Apple is unique in its sector. Therefore, we'll simply compare it to other big tech companies. What's surprising here is that Amazon, with its highest revenue, only had about 7.3% in net profit margin. If all revenues are set to 100%, the graph nearly reverses the slope, with Nvidia typically being the most profitable company on the list, but still to be confirmed on May 22nd when the earnings report comes out. The last item on the income statement is earnings per share. EPS indicates how much money a company makes for each share of its stock. It is a widely used metric for estimating corporate value. To calculate this ratio, we take the net income of $23.6 billion and divide it by the number of shares outstanding, which is around 15.5 billion. We get $1.53 per share. It would require more context to better understand where Apple stands in its valuation. Analysts typically use specific formulas with various assumptions to forecast earnings and to determine the financial health of a company. However, a side note. Since 2018, Apple has been repurchasing its shares, thus reducing the number of circulating shares. Therefore, when net income is divided by a smaller number of shares outstanding, the quarterly EPS appears higher. Earnings are reported every quarter. Since Apple is a cyclical company, their quarterly earnings vary depending on the time of the year. Apple typically generates more revenue during the holidays when customers shop for gifts. Apple also tries to time their new product launches to match when the consumers are more likely to purchase them. As a result, $6.43 is actually a combination of 4 consecutive quarters reported on an annual statement. Another profitability ratio that's widely used by analysts is called PE, or price-to-earnings ratio. Simply divide the current stock price by the company's earnings per share. Apple's PE ratio is 28.5. Is the company undervalued or overvalued? Well, the median PE ratio for the S&P 500 was 25 as of May 2024. However, Apple is a technology company, so looking at the U.S. tech sector, which is trading at PE ratio of 43, you might think Apple is undervalued. Therefore, using PE ratio to derive a stock's value is highly subjective and may depend on many additional factors. In summary, we looked at Apple's 2024 Q2 income statement and highlighted its key values. Overall, the company appears to be financially healthy with some loss of revenue. So, has Apple reached its peak, or can it continue to grow? We will continue to monitor Apple's performance in the future videos, so stay tuned. If you found this video helpful, check out our other videos on financial statement analysis. Don't forget to like and subscribe, and we'll see you next time.